All right, I'm back with another video. So you see, I'm trying to keep up my promise here. I made a video earlier in the week. I'm at the end of the week, but it took a while to edit when I converted it into a podcast. Okay, but today we're going to talk about a very important subject, and that is your credit score. Without a credit score, there's really not much we can do, right? When that credit score is real low. Now, I've gone through that. That's why I'm going to talk to you, not so much experience as a lawyer and a bankruptcy lawyer, but I'm talking to you personally now, okay? Because a lot of the stories that I talk about when it comes to credit and foreclosures, those are scenarios that I've dealt with. Of course, there's also all the issues, 24 years of practicing law. I get a lot of information that I'm always able to pass down to you. So definitely keep looking. This blog post here, this one focuses on dealing with credit, and the fact is how I was able to improve my credit simply enough with a personal loan. Now, I'm going to go through the whole story of how I actually got there. And, unfortunately, it's just one of those things that we can't control in life. This is when you learn early in life, right? That there are just some things you can't control. And this is one of them. I went from riding high on just all aspects of my life, financially, credit, and everything else, to kind of hitting rock bottom here. But that's what I'm here to talk about. It's just my way of proving to you not only the thousands of clients that I've had before, but it's also my way of showing to you that you're not alone. Other people have gone through this and they've come out through the other side. There's light at the end of the tunnel. They come out smiling, right? So I'm going to talk about this, and I'm going to show you first some of the things that what actually got me here. Now, first, I'm going to start off with my credit. I was doing great. Like I said, there was no issues. I had my home. I had a very nice car. I had everything that I wanted. I had a motorcycle. It was perfect. But sometimes things happen that are beyond your control, and this is the two big ones right here. It all started with Hurricane Katrina and Wilma. A lot of you have lost homes, due to hurricanes, tornadoes. If you're in Florida, even more so. And Katrina and Wilma destroyed New Orleans, right? That's the big area that we all hear about. But it also literally the eye of both storms went over my home, and it caused substantial damages to my home. And so now the issue is I'm trying to get my money to fix my roof, and the insurance company is not paying, right? So here's my complaint about insurance companies. They're in the business to make money. They're not in the business to cut checks. So what were they doing? If it's just one home, they don't care, right? They cut a check. But we're talking about tens of thousands of homes. They're going to try to avoid cutting that check no matter what. That is the God honest truth. That's just the way life works. If they start cutting out checks to everyone, then they end up in bankruptcy and they're calling me, which is exactly what they're trying to avoid to do. So for years, 3 years actually, I'm arguing with them, and finally, I'm this close to filing a lawsuit. And then finally, we settled, and I got the money for my home. What's the problem? Well, it was a 3 year time period. Now, during that time, we also had the bankruptcy law change in 2005, which means half of my income or more disappeared overnight. So, talk about 2005 for me, right? In June, I think it was June 1st, they changed the law. And then a few months later, I'm losing money every single month. I'm in panic mode already. But then on top of that, I have two hurricanes. It was a bad hurricane season. Those are the ones that really destroyed my home, knocked down all the fencing, destroyed the roof, etc. That was really, the camel that broke the straw that broke the camel's back. So now I'm facing these issues. I'm in foreclosure, and the only reason I'm in foreclosure is guess what year it was now? It was 2008. What happened in 2008? We had the mortgage foreclosure crisis. So now I've been fighting for 3 years to get my money to fix the home and try to sell it and flip it, because that was also part of the idea. I was like, I don't need this big home. I could just sell it, make some money, go buy something smaller. And I was actually very close, 1 week away from flipping that house and buying a townhouse in cash. And I would have no mortgage. And I was what, in my early 30s, mid 30s at the most. But not only did my house have serious damage, the townhouse I was buying also had serious damage. So that deal was done. But then again, where's the money? And with 2008, when the property values were cut 50, 75% in some areas, Naples, not too far, 100 miles west of Miami, 70, 80% value of the home was gone. Now I'm thinking, do I really want this home? And the answer is no. I walked away free and clear, and that started the foreclosure process. Well, with that came bad credit. right? There's foreclosures, there's creditors that I'm not paying, and then all of a sudden, if I wanted to borrow 20 bucks from the bank, they were not going to give it to me. So I had to improve my credit somehow. And with time, when I knew the statute of limitations that they were not going to sue me for all these defaults, if I didn't pay the mortgage, then I might as well not pay the credit cards because they were hounding me too. So I just said, I'm not paying anyone. Let's just see what happens. Well, I avoided bankruptcy, and after 5 years, I started rebuilding my credit. Why 5 years? Because of statute of limitations. 4 to 5 years in Florida. Every state is different. I know some states have it go as high as 7 years, but that's the time frame that they have to file a lawsuit against me. No one filed a lawsuit against me. I'm done with that one. But now comes the rebuilding process. And so, of course, I have bad credit. The bank is saying, why would we give you a loan? I'll tell you why you'll give you a loan because I'm giving you the money in advance. It was a secured loan, kind of like your car, but this time I'm turning around and giving them in cash. So it was a personal injury case that I settled, and I set aside about, I think, $10,000. And I went to the bank and I said, here's $10,000. Let's open up an account just to save that money. And of course, they're happy, right? And then seconds later, after everything was signed, can I have now a loan on my $10,000? What do you think they said? Now, if I came to you, you would say, I'm not going to give you a loan. Look at your credit. You're defaulting everywhere, etc. But if I already give you the money for the loan, why wouldn't you give me the loan? If I default, you already have the money. Now you already have the money, plus you're collecting interest on top of that money. So I do want to warn you that you are paying interest. So you got to make sure that the calculations make sense, that you can afford it and everything else. I didn't really have an income issue. I had a bad credit issue. But when you turn around, you give the bank $10,000 and say, give me a loan on the $10,000, they're going to give you the money every single time. Your credit is useless at this point. It doesn't matter if you have good credit, bad credit, or no credit. They already have their money. Remember, normally they cut you a check, they give you a loan, and they hope that you pay them back. This is different. They already were paid back. So obviously, I got the loan. Now, you do the same thing with credit cards. There are plenty of secured credit cards out there that you slowly rebuild, your credit. Now, clients always like to ask, I'm never going to be able to get credit again, right? I can never buy a home. I can never buy a car. No, that's not true. Plenty of my clients have bought homes and cars 2 years after bankruptcy. At the end of the day, it's based on your credit after bankruptcy, your deposit amount, your income, your expenses compared to your income. All those factors are considered. It's not just having great credit. You can have great credit, but if you have no proof of income, then they're not going to give you a loan for $60,000 to go buy a car. So you need proof of income. What are your expenses? You could have a high income, but if your expenses are almost leaving you with $0 left over at the end of the month, how are you now going to pay for this car? So it's not just income. Understand that. You got to look at the expenses, you got to look at overall income and everything else. Now that you know how secured credit works, and that's what I used, here's just a quick example of how and there's a blog post on that one, how I quickly just went up 60 points. And the secret to that is really not a secret. Okay, it really comes down to what we call the 30% rule. Now, what is a 30% rule? What is your line of credit? So let's say my credit card is a $1,000 is the maximum credit line that I have. What's 30% of that? $300. Now, if you have three credit cards and each one is $1,000 and you're at 30% or $300 or less, your credit score is going to improve. That's part of the tips. That's part of the games that these credit reporting systems work. It's not a perfect system, but I'm going to tell you how to kind of cheat the system. Now, it's not perfect. There are loopholes. And here's the simplest one. Let's say I'm going to buy a car that's worth $10,000, right? And I have the money to buy it in cash. Well, if I do that, then that doesn't go on my credit, right? What if the bank says, we'll give you a loan and we'll give you a loan for $5,000? That's half. What does the credit bureaus know? All they know is you got in debt for another $5,000. And next month, when you make your car payment, it goes down a little bit, right? And your credit score starts to adjust. But until you reach that magical 30%, your credit score is going to take a hit. I know it doesn't make sense. Why, if I have good credit and I'm paying monthly on this new bill, my credit score goes down? Because again, the 30% rule. If you're above that and you just got the car, if you get a car loan today for $10,000, tomorrow you're still going to owe the same amount. let's say a year goes by, you've paid down 10% of it, you're still 20% short of the 30% rule. So it's not going to work. So what is the trick? I'll tell you the trick I've always done, and that immediately build up my credit. So let's go back with those numbers. Let's say it's a $10,000 loan, and the bank says, we'll give you the full $10,000, but I've got money for a deposit. I don't care what the amount is. Let's say it's $5,000. And the bank says, no, 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 your credit's good. You don't need to give us the $5,000. No money down. You walk out the door. The next day, my credit's taking a hit, right? I owe $10,000. That's all the credit bureau knows. So what if my payments are $100 a month? Well, if I start making payments of 200, 300, etc. every month, all of a sudden my credit starts to improve because all the system, let's say the metrics and everything that they use to figure this out, they just know that I'm paying this debt off faster. Now, I had $5,000, right? To get, let's say I have $5,000 to give as a down payment. If the bank says no money down, that's fine. Next month I'll send you a check for 1,000, and 1,000 for the second month, and I just go all the way down for the next 5 months. In 5 months, I cut that debt in half. I'm at 50%. It's still not the 30%, but the metrics when it comes to credit reporting, literally the computers are blowing up thinking, look how fast this debt has been paid off, or at least half of it. So imagine when you get down to 30%, and if you pull that off in a year, your credit score goes through the roof. It's that simple. So I've done that with buying my car and my home. I try to figure out what's how much can you approve me for with the least amount of money down. So let's say when I was buying my home, they said you need to put down 10,000, but I had 50,000. I said, okay, not a problem. I'll put down the 10,000. Next month, send a check for whatever. Make up the numbers. I don't care. 2,500, 5,000, etc. Until I, get rid of the 50,000 that I had originally. My credit score goes through the roof, and then you see why I'm here. I have a 60 point increase in 1 month. Now think about these 60 points. Imagine the difference in interest if you're applying for a car loan and you've got a 650 credit score. Kind of average, right? I think average by 675, 680. Well, you're at 650. Now you're at 710. What if you're at 710 and now you had 60 more points that you're at 770? The bank is throwing money at you. I'm not lying. Just, it's raining money because they're saying this person is going to pay back their bills. We're guaranteed. You get a lower interest rate. If you get a lower interest rate, guess what? You start saving money. So if you can keep your debt controlled and have it under 30%, that will, that will improve your credit. And like I said, more importantly, if you have the money and the bank doesn't require the full amount as a deposit, just think about the credit. Again, the credit bureau only knows you owe $10,000, and all of a sudden you start paying faster and faster that car payment. The credit bureau goes crazy. It increases your points. The higher the points, the better your credit score. The better your credit score, the better the interest rate you're going to get. The better interest rate, the more money you save at the end of the day. So keep in mind that 30% rule. Try to have your debts under 30% consistently. Now, if you're going to go buy a car in 6 months, then you better start getting near that 30% as soon as possible. Don't do it the day before, especially since the credit bureaus work on a 30-day cycle for the most part. For 6 months, try to stay under 30%, and you'll see your score will continue to climb. And remember, by doing so, you're saving money because you're paying less interest on the amount. Obviously, paying 8,000 interest on 8,000 is not the same as paying interest on $3,000. So keep that in mind. One of the simple tricks I've done, and again, was I applied for credit and I got a loan with no problem because I already gave them the money. Now, you don't need $10,000. You can do it with $200 and get a secured credit card, and little by little, you're rebuilding your credit. But more importantly, if you have the money to give a substantial down payment, then see if you can reduce the down payment. What is the lowest the bank is willing to go? And then get that same money and start applying it towards that debt. And you'll see how your credit score will blow up through the roof. All right. So, as always, if you have a question, feel free to reach out to me. Today's blog post I actually posted. Today is May 2nd. The blog post I did this morning focuses on a question from a reader regarding when can they file for bankruptcy, even because the foreclosure sale date was 2 days away. So that was someone that reached out to me, and I wrote I responded in an email because there was no way I was going to get the blog post done on time. This reader was able to save their home, so I just sent a quick email, and then I wrote the blog post a few days later. But try to reach out to me if you got any questions and you don't understand how these issues work with the credit bureaus and the ratio of 30%. Just send me an email, and I'll make a blog post out of it so you get a better understanding of the process and what you need to do. Like I say, this is all part of you and me. This is our steps towards financial freedom. Okay. Now, for those of you who have my textbook, the paralegal studies students and the legal studies students, keep going back to the blog. Right, the blog is a great way to supplement the material that's in the textbook. And I promise you, I will be making a video going over every single chapter of the textbook on how to file for bankruptcy and everything else. So that's definitely going to help you out in your classes. And as always, come follow me on Twitter. Right here I am. Come find me. You can also find my blogs as well as on Facebook, and I'm even on LinkedIn. And of course, email me if you're one of the readers and have any questions. Okay, so today I already have the blog post out. A quick, simple trick to go ahead and improve your credit. So I'll keep putting out these videos, I'll keep putting out the blogs, and keep reaching out to me if you have any questions. All right, everybody, it is Friday. Have a good weekend, relax, and let's get back to business on Monday. Take care, everybody.